Mr. Dimon, thank you so much for making time for this conversation on current events and larger trends that may be shaping the banking sector. This is a conversation that will be aired at the banking conference at the IESE Business School in 2 weeks. Today is Monday 1st, and we woke up to the news that JP Morgan is acquiring most of the assets and part of the liabilities of First Republic Bank. And I wanted to ask you, how has this decision been evaluated, and what were the most critical aspects of this deal?
Okay. First of all, thrilled to be here. Love my trip to Madrid, so hi everybody, and sorry I can't do it in person. It was, first of all, it had to make sense for the shareholder. So it wasn't just a gift. We had to make at least minimal sense, and it does, because we earn more money, we can handle it, we're going to hedge all the exposures, et cetera. It comes with some, we're writing everything to market, so it's very clean the way we have it. We have some loss reserve benefits, et cetera. And obviously I think it's very good for the American system. This bank was out there, it was concerning people, so this kind of puts this part of the crisis over. This is being aired in 2 weeks, so you never was going to happen in 2 weeks.
Yes.
But I think it's very good for the American financial system. The third thing, by the way, this one happened the way it's supposed to happen. We're taken over on fundamentally on a Friday. They opened up a data room. Yep. They made it available to everyone. They did it at the least cost. It will not cost the taxpayer anything, and there's no special thing that had to be done, like guaranteeing uninsured deposits, et cetera. So it's good just for everybody involved.
And do you think that after this acquisition, hopefully we are going to see a more stable financial situation?
Yes, I think you've already seen that. People calm down. A lot of banks around the world, but the regional banks in the United States that were getting a lot of attention reported some good results. Good liquidity, good earnings. So of course the banking system always has a little bit of fragility built into it, but so far it's calming everything down. And for those people who have too much interest rate exposure, be inside banking or inside real estate, you should fix it. I mean, because you don't know that rates aren't going to kind of gap back up a little bit to conquer inflation.
So is your reading that the situation, the unfolding of this banking crisis was mostly because of this extreme exposure to interest rate risk?
Yeah, so there's like 5 banks who were offsides, meaning that they had a lot of uninsured deposits which could move quickly, that they had a lot of interest rate exposure, that invested a lot of money long at low rates, and they had a lot of that in their held to maturity portfolio, where you don't have to market, but the world can see what it would be if you did. So therefore, it's almost the same thing. And so these are the only ones that were really offsides in that. Everyone else is probably in good shape. And those 3 things that I just mentioned were pretty well known. They were not a surprise. And they're disclosed. And so, but I think it reminds people that things that scare you can make people panic in a way that you just don't think about in your normal day.
So there was a trigger. So these things were known, but there was a trigger, and that panic trigger.
The trigger was the day that Silicon Valley Bank. There was a bunch of things that happened at Silicon Valley Bank which were abnormal, but they announced that they were selling bonds at a $2 billion loss. That loss had not gone through their capital account, and that to make up for it, they were going to raise equity. But that heightened people's sense, my God, they have a $2 billion loss I wasn't focusing on. That was one thing, and they couldn't get the equity.
They couldn't get the funding.
You should do it the other way around. Raise the equity, then take the loss. And the way you do that is you do what we call over-the-wall crossing. You raise it privately, fully disclosed to the private investors, but you announce that we sold so much stock to private investors, they knew we were going to take this bond loss, we're in good shape. And the other one, which is not this, the only thing that wasn't completely known, a handful of venture capital companies basically controlled 30,000 corporate accounts. All these venture capitalists, and when they said, we want you out of the bank, they just all left. And that's not normal. If you have a lot of regional banks, they may have, 3,000 or 5,000 corporate accounts, but they've known them for a long time. They usually have loans and deposits with them. They don't tend to move like a flock.
So this flying of deposits was the trigger to then see
$140 billion went out in 2 days or 3 days. No one's ever seen anything like that before.
Which we can connect this with the idea that, of course, we have now online banking together with social networks that provide real-time data and eliminate these frictions on deposits. So do you think that these 2 trends are possibly changing the stability of the financial system?
I don't think it wasn't quite that. It was more than a handful of people who controlled the accounts.
Yeah.
But obviously, when we look at the risk here, if you hear me talk about that exposure, I talk about it will move faster. You have to compete more. We don't know exactly what. And then I would add to that risk is quantitative tightening. The central banks are reducing deposits in the banking system. And how and when that takes place and the full effect of that isn't fully known. So I'd be prepared for that too.
So you're saying that banks should take care of interest rate exposure. Are there aside from that, other risks? So we've been talking about,
I'd say concentrated deposits.
Okay.
I think everyone should stress their own balance sheet. Are they comfortable with interest rates at 5%, 6%? I think real estate will have an issue with higher rates too. So what happens in any recession? So I think basically if you have a recession, higher rates, real estate and other things will have stress. Can you handle that stress? And look, we're adults. So most banks are completely aware of that. They plan for it. They manage the company through the cycle. You know there's going to be a cycle. You don't know how bad it's going to get per se, but you should be able to handle a basic recession.
So we have to position the balance sheets to the macro environment.
Low interest rates for a long time now, okay?
Yes.
And huge liquidity in the system. And those two things are reversing.
So how are you positioning the balance sheet of JP Morgan vis-a-vis your forecast on inflation? How do you see inflation evolving?
I think there's a higher chance than others think that inflation won't come down low enough. We had more fiscal spending than the world has ever seen in the shortest time period the world's ever seen it. So, and that's still in the system. You had huge QE, and those are gone. So you might have the 5 or 10-year rates ticking up. So again, I think that might go to 4.5%, 5%, 6%. People should be prepared for that. Just don't take it off the risk because it hasn't happened in 15 years.
Very, very clear. So you think that structurally the system is going to keep inflation at a much higher rate.
You may have seen a sea change. Just like you saw one after Paul Volcker, interest rates basically came down for the better part of 20 years. Now you may have them creeping up for the better part of 10 or 15 years. So yeah, I think that there may be a real change to the enormous amount of fiscal stimulus, government borrowing, QT, lack of trade going to nations where labor is cheaper. And these will have effects. And so we should be prepared for that. Again, I'm not saying I'm running the company like that's the only thing that can happen. I could be dead wrong and the company still will do fine. But because of that, we are very cautious about taking too much interest rate exposure. That is true.
If we talk about regulation, as you have mentioned at your letter to shareholders, you advocate for a more collaborative revision of risks rather than this academic complex exercise. Yeah. So what would better regulation look like at all, if at all?
Yeah, so there are hundreds of regulations. Okay, and it is like our resolution recovery plan is 200,000 pages long. One CCAR test is 200,000 pages long. And I think one of the problems with that is people think that solves the problem, and it doesn't. And I also think when you run just one test, that kind of lulls it into a false sense of security. So I think a lot of banks thought they shouldn't have. I'm not blaming the regulators in this, but they should have said that's the only stress I can have. And the Fed is telling me rates can stay low for long, and I can rely on that. They shouldn't have relied on that, but that test said that. So when you ask me about the risks I'm worried about,
yes,
and you go through CCAR, so I'll have thousands of people working for 6 months in CCAR. I'm worried about cyber, pandemics, war, depression. Yeah, I'm not worried about the CCAR test, but that's what all my people are doing. And so it is, to me, the better way to handle risk is we first have a real conversation about what are those things, what should your people focus on in the here and now, what are test-based, what are just common sense, what are rules we put in place to stop something from happening. So like the resolution recovery test, those weren't even taken off the shelf for Silicon Valley Bank. They weren't used. Yeah. So you have to question, well, then what are they? Well, what might have been used if you said your interest rate exposure can only be X. Or if your capital goes below Y, you got to raise more. And it just...
Or you're too much...
Just change the rules that protect you and the company and the system. And I should also remind the folks, I don't actually know what the rules are in Spain. The losses borne by the deposit insurance fund are paid for by the banks. It's a mutual insurance scheme run by the government. And which means that it's in our interest that banks don't fail.
Yeah.
So I want good rules to stop banks because this $30 billion of losses is going to be, we're going to probably pay 4, 5, 6 billion of it. So how can I possibly want that?
Yeah. Let's talk about AI a little bit. You've been an advocate of the importance of AI,
Yeah.
and there are 200 people at JP Morgan.
3,000.
3,000.
Data engineers, data scientists. I think there's 200 in what we call AI research. We have I forgot the name of it, we have a program that costs $100 million to do, machine learning for consumer fraud. It costs $100 million, consumer fraud. Even with all the stuff to read about, it's down $300 million a year. That's one project, we have 300. We try to measure it all, sometimes you don't. It's handling errors. It actually, some of our equity trading desks, which is what we call, I forget the name, robo-hedger.
Yes.
It's hedging. Those things move so quickly, it's making all the hedging decisions in real time. If you're a client, you want to do a trade or a swap or something, we know who you are, and it puts up the screen and what we think might be relevant to you, as opposed to asking you and having to type in, bring up the screen. And so it's already doing millions of things. And AI, think of it as just the tip of the iceberg. This is, and you worked on this yourself, this is bigger than anything you can imagine. It's as big as what people say. There are two potential, there's one definite negative and one small negative.
Okay.
The definite negative is it will be used by bad guys. So you got to build that into your thinking, and also it can do bad things on its own. So we have a thing called AI ethics. We have a department that's going to make sure AI explain, AI ethics, because you don't want to do bad decisions by other means. And the second is, there's a lot of fear that people that technology will reduce jobs and stuff like that. There's been a fear of technology forever.
Yes.
Technology is the reason we all lived better and live as technology. So in general, technology has been great, but it could be very disconcerting or disheartening for people who lose their job because of the technology. So it could be good for society as a whole, but not good for that company, that town, that type of job. And if that happens in society, we should adjust quickly, retrain people, slow down the implementation, do it in a way that society really benefits, doesn't have the negatives.
We hope to find the complementarities between all of this, what AI can automate and facilitate, and then the human insights to
and it'll make human life better. So as long as the bad guys are held at bay, but you have to develop AI to hold them at bay. We already have examples of people using AI to get around certain recognition systems.
Yeah. So the other major technological breakthrough, blockchain and the Onyx project that I find fascinating, how it moves across different dimensions of payments. How do you envision the payment ecosystem changing over the next 5 to 10 years?
Yeah. So, blockchain is a real technology.
Yeah.
I remind people, this one is not like AI.
No.
We've been talking about it for 12 years. Very little has been effectively implemented. I think the crypto Bitcoin stuff is a complete farce, but it's a technology. It's a ledger where we all have exactly the same data, it's permissioned, we see it at the same time, and then that ledger can do things. So like when we move money around the world, send you money, I have to send it to Santander, then they move it to the town you're in, and where's my money? And my mother sent it 3 days ago, and then sometimes it gets sent to their own account. Or think of even corporate payments. Even if you send it to the right company, was it to pay for the engine or the maintenance or the oil or the gas? So people couldn't wait, which one was that again? And so blockchain, everyone can see at the same time. And it can move almost instantaneously, and you can move money with it. Smart contracts, you might be able to buy a building on a blockchain, and you buy 1% of the building, you see the financials, do the due diligence, it's all been vetted by specialists. And so, I think blockchain will be a technology that gets rolled out for very specific, large, small, permission, unpermissioned use cases, et cetera.
And then the ability of creating these tokenized assets.
That's safety. Tokenized is mostly about safety and you can and real-time movement. So you're going to have that too, and so on.
So talking about payments has been the natural entry of big techs, and recently Apple, together with Goldman Sachs, opened a new saving account with a major interest rate of 4.15%. What do you think about the entry of the big techs into financial system? Is this something that worries you at all?
It does, yeah. Someone made a comment about Goldman dipping going into consumer business, and someone said they're just dipping the toe into the ocean, which means I said that's a good way to lose your leg, and it's a tough business, which I think people find out. So I wrote about Apple in my chairman's letter. And what is a bank? We hold money, we move money. We manage money, we lend money. That's what it is. They have a credit card. They white labeled it through Goldman, but they're a competitor. They're in a slightly different ecosystem, but they have hundreds of millions of clients, very low costs, huge amount of data, Yeah, so, and I'm not complaining about Apple. I'm simply saying I have to deal with reality. You're going to have that. And you're absolutely right. Payments is the best competition has come from payments. Stripe, PayPal,
Yep.
a bunch of other ones. Some others are they're just trying to front the banks. That's not going to work so well. Or others, they offer the same services cheaper. They try to attract a different clientele. It remains to be seen whether that works. I always tell people, when you see people advertising, for certain types of accounts at CNBC, it's not going to work. It's not a working model. Cost of acquisition is too high. And so there are other issues that have to do with fintechs that are about cost of distribution.
However, for big techs, if they enter beyond payments, if they start to enter savings or even lending with a very different balance sheet model than banks, that can have.
So Apple's doing BNPL on their balance
Yes.
sheet.
Yeah.
But you're right. Some of these neobanks, et cetera, it's not their account. They're not moving the money. They're just trying to serve you, which is fine, but they're trying to serve you better, and they get other people to do some of these other services. And so I think regulators have to look at these things and say, what is it we want? The same product should be regulated the same way. If it has the same risk. And banks, because I know a lot of banks in the audience, I call us guardians of the financial system. We do KYC, AML, BSA, sanctions, OFAC. We protect our customers from doing really dumb things with payments sometimes. But we run any payments you do with us generally run through AI systems to stop you from sending it to the wrong person. We use AI to do elder fraud. That's our job. But some of these other companies, they have no obligations like that, or very few. We should be proud of that job. That's our job, but you can't simply make it a burden for some people, not anyone else. And so they should be very thoughtful about that. So there's this banking, non-banking, shadow banking.
That eventually has to be sorted out based on the type of services that are provided, rather than the nature of whether you have deposits in your balance sheet or not.
For the most part.
With respect to fintechs, now that we see a very different macro environment with money being much more expensive and growth opportunities not as evident as a few years ago, do you still think that fintechs have much to disrupt or innovate in financial services?
There are hundreds, and they've spent tons of money, and they still have tons of money. And I don't like talking about as a group. Yep. Some have done a great job, and we should acknowledge that. Some have done a great job. I wouldn't call them a fintech. They're something that a company came up with, which is fintech type services.
Yes.
Some did stuff that we could have done ourselves. And I think a company should be self-critical. We could have done it ourselves, and we didn't. They beat us to it, or they simply did it better. And so we should acknowledge that. Some won't survive. They have business models that won't work. Higher interest rates. They don't have time to try. Maybe so. And of course, people like us, we're adopting new technology all the time. You can do a 100% digital account. A lot of our credit cards are through digital marketing, which is quite cost effective. A lot of our, like I said, the data we use is all digital, and that we're giving more and more services on the phone, which are really fabulous. Offers, data, information, wealth management, buying and selling. So we're constantly enhancing our services and products. So I look at the world's going to be very competitive, fintech, big tech, and we got to compete, and we got to be very fast also, and lean and mean, and to compete.
Probably traditional banks versus neobanks, the differentiation is sort of shortening, right? Traditional banks are becoming savvier technology-wise. They are adopting all the digital services.
Yes, well, I know some of your banks in Spain, and they have great digital services. We look at them, and if I was in fintech, I wouldn't necessarily try to compete anymore, because that's the other thing I understand is that having branches also helps digital. And a lot of people, and we're always testing this, like even people who never use the branch, we have a higher chance of getting the account because they kind of want to know it's there in case I need it.
So digital transformation still today needs people. What type of talent and leadership are you looking for, JP Morgan?
We need talent everywhere. We need talented bankers and tech folks and digital folks. I think the digital AI cloud stuff is just growing dramatically. And that is where you're going to need the most people. I said we have 3,000 people in AI. I think it's going to double every 3 years for a decade. And same thing with digital services, because now you're serving these, and your ability to use cloud. Like I gave those AI examples, but the more data and the faster, the more you can offer digital service. that's seamless, that's fast, the client likes. And so I think it's all those things. And we want people with high character, work ethic, the same thing you want for any job.
You've led the bank since 2006, gone through major crises throughout these years. How do you face challenge? Is there a particular way that you face difficult situations?
I mean, a couple of quick things. Like, first of all, you do it. I mean, it's not just me. When COVID happens, we got everyone in the room and saying, this is bad. We started a war room. We started talking about it, thinking about it, debating it. That was back in February before it became a big thing. So once this bank thing's done, we did the same thing. We got the whole team together. You do this, you do that, bring in problems, constantly analyzing it from different angles, talking to regulators, and just getting smart, making sure you really know what's going on and how it's affecting your clients, how it's affecting your people. I would say we've had people working around the clock, including me, for 7 or 8 weeks. There were people who probably had multiple sleepless nights just in the last couple of days. And so constantly sharing information, working the issues, you got to be prepared beforehand.
Yep.
So obviously, if you're going to have a war, you better have an army. Just, to try to structure an army right after the war starts is a mistake. And so, and give it the time. Like very often, I always find when there are problems, I didn't cancel a lot of meetings, but I would have canceled anything I had to for if you needed my immediate attention or something. So I felt good I could do them, but I also would make sure I'm here, so that we're thinking it. So as we were working on First Republic Bank, I was just half the time just sitting there thinking and doodling, but I was thinking, what about this? What about that? And they go ask questions, and you come to a better place. It's like if you do that, you will have a far better answer. I tell people often the answer is waiting to be found. It's there. It's just not in your head alone. And when you get a lot of the people involved, and you just kind of work it, and the people involved feel they're entitled to speak up. They're not there just to.
Yeah.
So we had junior bankers who were the ones that that's not the way that works on that day or whatever it was.
So how large is your team that you use as sparring partners to sort of challenge you and
my direct reports are like 12.
Okay.
But once the crisis starts, that group of 12 would be meeting several times a day, as opposed to like once a week. And anyone who can put stuff on the agenda. So it isn't my agenda. If you come, I want the best that you have, and you want to circulate stuff. And also in a crisis, bring who you got to bring. Don't come to the meeting and say, the person who's the expert in this is Isabella. And we say, well, bring Isabella. So, there are a lot of people who would come to the meeting, so there wouldn't be 12 people. Like our floors downstairs, there were 30, 40, 50, 60, 70 constant meetings of people and large meetings going through the deal review and the credit risk and the negotiation strategy. They had anywhere from 5 people to 30 people and maybe more and something like that. So that's where you change. Far more, get the people involved, constant reaction, treat it seriously.
Well, to close our conversation, Mr. Dimon, what would you love for your legacy to be? Sort of, if you think about, what are...
There's no one thing. I want to leave the company behind a lot stronger than I found it. My country and my family are more important to me than the company. So just that you make the world a better place right here, and you contribute in the way you can. And you, as a teacher, and me as a CEO, and if someone could be a doctor or nurse or a janitor, they make the world a better place. I've always seen these terrific stories about people talking about who made them better or the world better, and it can be anybody who just has that heart and that gratitude and that compassion and that intelligence about that subject, something like that. So just make it a better world.